We'll talk about the talk and the action on Asia Market Week.
ASEAN Rewind, part of Asia Market Week, Friday at 7 p.m.
Presented to you by Siam Commercial Bank and PTT Group.
Weekends, enjoy a CNBC life.
Why on earth? I've never done that before.
What's your idea of paradise?
The real magic of this place is that you leave totally inspired.
From spectacular hideaways to the road less traveled.
What else are you going to do in this part of the world?
Rock climbing in a wetsuit. Yeah, nice.
We've got something for everyone. Travel and leisure. Weekends on CNBC Live.
Au revoir.
Turning to the commodity space now, NYMEX crude currently sitting at 0.7%, down by 31 US cents at 45.07. Jonathan Cornefell is Asia Director at Hudson Capital Energy. He joins us now live from Singapore. Jonathan, great to have you on board again today. Just having a quick chat in the break, and interesting to see that you think that this is already one of the most convincing rallies that we've seen in some time. So what does this say about your, I guess, your feeling about the market right now?
Well, it's interesting. You know, the rally's only one day old now, but it's based on a number of interesting things. Yesterday, the inventory numbers came out in the United States, and that really caught a lot of traders off guard. We saw the second decrease in stocks in the U.S. in as many weeks, and we also saw a further uptick in gasoline demand. So what we're finally seeing right now is a return to demand and actually a decrease in supply, something that has been a long time coming now, many months in coming. Gasoline demand in the U.S. now is about a little over 2% higher than it was a year ago at this time, and I don't think a lot of traders were really expecting those sort of numbers even a month ago, 4 or 5 weeks ago. You're starting to see these changes now reflected in the benchmark contracts. Dubai crude especially has flipped now from a contango structure to a backwardation structure. Contango is when the front month contract is depressed relative to the back month because of a supply glut. The OPEC cuts that began 4 or 5 months ago are actually following through right now. They're cutting between maybe 75 to 85% of what they said they were going to cut, which is very high follow through, and it's actually following through right now in the heavy sour crudes, which is what the the Dubai contract is. You're also seeing that follow through now into WTI and Brent a little bit. It's going to take some time for WTI, especially because WTI is a very specific instance where you have the supply glut in Cushing, Oklahoma, and that really comes from the fact that refiners haven't been buying the crude oil, so it's just been building up there. But now with OPEC cuts, with less imports into the United States, increased gasoline demand, so refiners are now buying that crude oil and they're starting to draw down the stocks, turn it into gasoline. So we're starting to have a bit of a fundamental shift in what we've been seeing in the market structure.
You were talking about OPEC and 75 to 85% of the supply cuts actually going through, which I think has surprised many in the market that it actually has been quite so high a percentage. What about this meeting in a couple of weeks from now? There does seem to be not as much confidence, I would say, as there was even a couple of weeks ago that it's a given that we're going to get further production cuts, further supply cuts. Even a couple of days ago, if you had asked me Monday, I would have said definitely they're going to cut about 1 million. They're going to announce a 1 million barrel per day cut, probably actually follow through with maybe 500,600,000 barrels. That was when the GDP numbers out of the U.S., the terrible GDP numbers, pushed WTI below $40. But now you're starting to see a bit of a shift now in the marketplace again, with 2 weeks in a row of inventory declines in the U.S., uptick in gasoline demand. So it's starting to look a little bit different. You're starting to see Angola and even Iran have come out and said, maybe let's take a wait-and-see attitude right here. So it's very hard to predict, even on a day-to-day basis, what they're going to do, because I don't even think they know what they're going to do. And if you see WTI continue to drift back towards $50, if you see the Dubai crude stay in the backwardated structure, U.S. gasoline contracts are now backwardated. They flipped from contango also. There's a lot of signs right now that the market is really finally starting to respond to these cuts, and they might be able to hold off on further cuts. One last point is that Saudi Aramco announced that they're going to be charging more. They're increasing the price that they're going to be charging for all crude that they export in April. That in and of itself is a very strong sign that they're going to cut. So there's a lot of signs either direction as to what they're going to do. It's very volatile right now. It is volatile and very difficult market to pick. Jonathan, thank you so much for being with us today.
Sure.
Jonathan Cornefell with me there, Asia Director at Hudson Capital Energy. Well, let's check in on Indian markets now. They come online in just under an hour.